Hello everyone and welcome to Smart Investing. My name is Albert and today's video we're going to go over 4 stocks in the auto and truck manufacturing parts and vehicles company. So we have these 4 stocks. We have WKHS, and then we're going to start from the bottom and then move our way to the top. So first stock up, WKHS. We're going to be going over fundamentals and technicals. We can see here the market cap for this stock is 27.86 million, rounded off to 28. Negative earnings we have here that are being reported. Awful numbers. I mean, the share price right now, markets are open. It is 2:55 p.m. and share price is at 1.48. Today is Wednesday, July 10th. The chart here for the last 5 years, you can clearly see this jump from about, the low for 2020 was around $40, and it went to a high of close to like $800. That's at least a 10 times gain. So we have here 2020, then in 2021, and then it dropped back down in 2021. You can see right here, try to gain some momentum in June, and then it just kind of failed and fell apart. And then after 2021, it just kept dropping and dropping and dropping. Looking at the 1 year, looks bad. It went from a high of 28 all the way to about, a high of about 26, all the way down to $1. You can see here they had a stock split on June 17, 2024. But again, with a stock that cheap, it's not going to help it that much when the stock is already on a decline for the year. Looking at fundamentals, we're going to use some general accounting practices. We can see here that earnings reports were negative. See here in the first one, and then you have a big miss here in 2023 for Q4. So it looks like they were reporting negative 9 cents, and they reported negative 19 cents. That's a big miss. So going back to the chart in Q4 for last year, is it that one? No, it's Q4. So obviously this was a big decline from this quarter to this quarter, but this was an actual big miss here from Q4, and then so basically we went down from $6 all the way down. It wasn't much really, because it kind of picked up, but it went from $6 to a low of $3, and then it picked up right before earnings all the way to $5, and then again carried into the earnings, and then the stock split even made it worse. So all in all, the stock looks horrible from a technical standpoint. Basic fundamentals I saw looks pretty horrible too. Looking at annual earnings, if I have any, or annual numbers, ROA was negative. ROE, it's not giving me any of these numbers. I don't know what's going on. But anyhow, let me try to pull this up again. So anyhow, with those numbers, again, they were just negative. Doesn't look good. And I don't see this company doing any better in the future. So again, ROE, we have negative numbers for the last 3 years, and then the last 5 years, obviously we're pretty good in 2020, but it's weird how in 2021 this was a company that did not do good for their ROE or their ROA. Earnings, awful. One of the highlights of the factors that I look at, just looks bad. Net margins as well, awful. Debt to asset. The debt levels don't look too bad, but, you know, comparing to what the other numbers have, it looks pretty bad. Net income at negative 124 million for 2023. Comparing to 2022, they had even a bigger loss from previous years. And 2021 was their worst, considering that on the share price, they were doing tremendous. So something doesn't add up. They must have used more money than they were making, and things just collapsed from there. Revenue in 2023 had an uptick from 2022. In 2021, negative numbers. I mean, that looks awful. A nice jump from 2021 going into 2022. But again, to be unprofitable, and especially on the revenue side, that looks awful. Definitely, I could see why 2021 going into 2022 was going in pretty horrible. And I could see it staying that way for a long time. Balance sheet again at 41% compared to the assets, 60% assets, and then needs a lot of work. Even with the cash flow, I mean, you have negative cash flow. We're looking at about, let's do 143, so negative 60 million in cash flow. Horrible company the last few years. I know in 2020 and 2021, the company looked promising, but again, this is why I like to do annual numbers and I don't do quarterly. So for this year, this company is trash. Next one up, ticker symbol SRI. Market cap is at 394, 52-week high and low. We have here of a difference of about $10. Earnings are negative, as we can see. Future PE, I have nothing for current PE. Future PE at 47, I don't think so. We're going to look at further numbers to justify that. So looking at the chart, let's look at the last 5 years. Choppy. Very hard market and stock to get into. You see this jump in 2022, and then it's starting to look even worse with these big jumps here and these big declines. We can see here it kind of broke resistance recently, back in basically the past 2 weeks. Actually, the past 2 weeks, it's been breaking that trend into the downtrend, and so with a share price at $14, I mean, it's going to slowly bleed down. So looking into the fundamentals, we're going to dig deeper into that. Let's take a look at that. So actual numbers, we have trying to gain into positive territory. You know, let's see if they actually reported positive earnings. I'm not getting anything there. So let me see. It's not giving me anything. So anyhow, looking at annual numbers, ROA negative numbers for, I mean, just slightly, but still, it looks pretty bad. ROE negative numbers as well. Let's see if comparing it to 2022, they try to do better, but those numbers just still look pretty terrible. Earnings are negative. Margins pretty bad. Debt levels slightly creeping up. I mean, you see these numbers, 51%, 52, then 55, 56. I mean, if you were a good company, you could get by with that, but looking at the market cap and these numbers, I mean, they look horrible. There's just, what I'm noticing, there's just no appreciation for the smaller stocks, the smaller market cap stocks. Russell 2000, I don't even know what the number is right now, but I can tell these small caps are not getting appreciated. They're just pretty much getting slaughtered. This is through every sector. So I could imagine just keep on going through all these smaller cap companies. So looking at the net income, it looks horrible. It looks horrible. You have negative numbers, negative 14 million, negative 5 million. Revenue's still flat. Numbers look awful. Awful, awful, awful. Cash flow for this company, I mean, overall, I mean, looking at the 2023, we have, let me see, 5 and 17. I mean, you know, negative around 12, more or less, negative 12 million for the cash flow. Company is awful, awful numbers. So two companies that are horrible. Don't add this to your watch list. Next one up is ticker symbol FLYE. Let's look at the 5 year. Not giving me anything. Okay, look at the 1 year. Nothing. So this stock is actually a stock that has recently been released. So we went from June 2024. So we had that downtrend of about, I don't know, $1 and change. A low of about 360, then a high of about 653. Then it peaked down again. So it's starting to actually gain some momentum. Volume has actually picked up here. You can clearly see 2.76 million. Market cap of about 163 million. I don't know if Tesla is actually supporting the sector, because obviously Tesla's a huge company, billion-dollar company. So I don't know if this sector is a hot sector or if there's actually something going on with this company that's starting to have this nice little gain here. But again, for the most part, not the day-to-day. For the day-to-day, it looks okay. But, you know, for the company in the long run, I don't see good numbers. We have 2023. It's not giving me numbers. I mean, obviously this company just released, but again, positive numbers. You got to give it like till the next year to actually see what's going on with this company, and then I can actually make a final decision. Net income, obviously, you know, with this AI craze and all these bubbles that are, you know, exploding in the uptrends, this might look like a company that might be in a bubble. Who knows? We'll see day to day. We'll see who likes it and who doesn't. So from a fundamental standpoint, I cannot say. So far, I'm going to say no, because I don't have an answer for you yet. Maybe later on, next year. We'll see if this company is a decent company. Let's see what they do. So they are involved in electric motorcycles, bikes, scooters. Okay, food delivery workers, I guess, use them, or they're trying to gain momentum and traction as to selling to companies that would, you know, have drivers deliver and all that. New York City is definitely a big location that I see on here. Leases vehicle in Brooklyn, New York. So e-scooters. Company founded in 2022. So again, electric vehicle company, small time. Again, we'll value this at a later time. So for now, no. And then last company we have is ticker symbol CENN. CENN. Share price is at 1.7. Market cap is at 52 million. Negative 0.17 for their earnings. We have here 52-week high and low. Looks horrible, horrible, horrible. Let's look at the last 5 years for this company. Look at this. We have a high. Let's look at the max. We have a high of about 860,000 in 2013. Then, what kind of company is this? 138,000 in 2015. This looks like a Berkshire Hathaway company that went solid and then just went dead within a few years. So we have here the last year from $4 all the way down to like $1. This company in the last 5 years has fell 99%. This is pretty Shameful. So looking at the fundamentals, we have here the annuals. We have negative numbers. I mean, awful. Looks awful. ROE and negative. Numbers look horrible. I'm not gonna explain the rest. Just running right through that. So numbers look pretty bad. 2023, not bad for the debt, but for a small company like this, I want to see a lot of big numbers just moving up. Net income, again, that just doesn't cut it. Revenue has just fallen like off a cliff, like from 2021 going down. I know I have the first three numbers here for 2021, but overall, you know, it looks pretty flat if I was to add those up. And then 2022 around 9 million, and then 2023 22 million. These numbers look pretty bad. Balance sheet is around 34% for debt. Balance sheet looks okay. Other than that, that's the only decent thing I can say. For their cash flow, looking at this, we're gonna look at the overall numbers. I mean, this is negative, you know, over 100, negative 100 million in cash flow. So this stock looks awful. Definitely awful. Do not add this to the watch list. We're gonna look at the title for this company and see what they do. Manufacturer of electric light and medium duty commercial vehicles. What kind of purpose do they serve? Last mile delivery and city services. So there's your highlight. There's your highlight in metro areas. Also across 16 countries, North America, Europe, and Asia. So there you have it. This company needs a lot of work. So there you have it. Thank you guys for watching. These are the 4 companies that I have. I said no to all of them. I'm going to make a shorter video for this one. So again, thank you guys for watching. I'll see you guys in the next one.